In the world of business, numbers tell a story, but only if you know how to read them. Too often, business owners confuse bookkeeping with accounting. They may seem similar, but understanding the difference could mean the difference between guessing your profits and truly knowing them. Let's break it down. We often meet business owners who don't understand the difference between bookkeeping and accounting. And honestly, it's not their fault. Business owners are focused on selling their product or service and keeping customers happy. But to know whether you're really making money, you have to measure your results. That's where bookkeeping and accounting come in. Most small businesses start the same way. The owner wears every hat: CEO, CFO, salesperson, and the one delivering the product or service. As the company grows, they add people. Suddenly, that small business becomes a $10, $20, or even $30 million operation. Now they're spending money on marketing, insurance, rent, and payroll, but often very little on accounting. After all, they think, it's just bookkeeping, right? Wrong. Bookkeeping is simply the act of recording transactions. Putting numbers into your accounting system, whether that's QuickBooks, NetSuite, or something else. A bookkeeper enters an invoice for a sale or records a bill from a vendor, and that's usually where it stops. Bookkeeping is a clerical process, not an analytical one. It doesn't interpret what those numbers mean or how they affect your income statement or balance sheet. Anyone who can use software and follow instructions can enter transactions. It's necessary work, but it's just the foundation. Accounting, on the other hand, is about applying principles and methodologies to those transactions. Accountants understand how each entry affects your financial statements, and they ensure those statements follow accepted accounting standards. This can get complex, which is why many companies rely on CPAs or go through audits and reviews. Accounting has been a profession for generations for a reason. It adds structure, integrity, and insight to your financials. And yes, good accounting costs money. You'll need a qualified accountant or CPA, not just the person who files your taxes, but someone who understands managerial accounting and can prepare statements in line with US GAAP standards. If your financial statements don't follow proper accounting principles, they can be misleading. Your margins, your balance sheet, even your cash flow might not reflect reality. Every business transaction starts with bookkeeping, but once it's entered, an accountant needs to review and apply accounting rules. Without that step, your reports won't tell you the truth about your business. Many owners think they're saving money by using only a bookkeeper. Then they wonder why cash is tight or margins don't make sense. As a company grows, 5 million, 10 million, or more, your accounting process has to grow too. That doesn't always mean hiring a big team, but it does mean having the right people in the right roles. One of the most basic accounting principles is using accruals to match income and expenses with the right time periods. We often see businesses using a cash basis or a mix of cash and accrual, and it leads to distorted results. After we clean up and convert from cash to accrual accounting, it's eye-opening for CEOs and owners when they finally see accurate financial statements. Often, they already had a gut feeling about their margins, and once the numbers match that gut feeling, they can finally trust their reports. With proper accounting, business leaders can pinpoint problem areas, manage cash flow, and make smarter decisions. After all, cash is king, and every transaction either generates it or consumes it. The bottom line is, as your business scales, you can't afford not to have professional accounting records. You need people who understand the latest accounting standards, CPAs who can guide your team and ensure compliance. Over time, you'll likely need a controller, then a CFO, and perhaps a full accounting department or outsourced accounting services. These aren't just expenses, they're investments. Having the right people in place will pay for itself many times over. You'll have a financially healthy company, the ability to weather economic storms, and reliable financial reports that help you plan and grow with confidence.